Mustek was established by David Can and imports and assembles and distributes computers and IT equipment, including the market-leading Mesa brand. It has a market cap of 645 million rand, a price-to-earnings ratio of 9, and a dividend yield of 2.9. Mustek. I think, Travis, let's start with you on this one.
For me, already in the sector, I'm not a fan of Mustek. I more prefer looking at Pinnacle Tech, and there's some other businesses around here. But the results weren't good for December 2011. It posted results. This company has been around for 25 years, so it's not something new. But I think it's also competing in a new age. It's competing in an industry where people aren't utilizing desktops much anymore. They're utilizing iPads, phones, personal fit technology. So I don't know how this is going to come into, this kind of competition is going to come into its space. Well,
this doesn't sound like a very exciting, tangible growth prospect going forward.
Look, the business model originally when David started the business was that he was Taiwanese and he had a lot of supplier relationships which he brought, and they did the assembly there and here. And they quite quickly got quite a strong dominant position, because prior to 1990 it was quite hard for people like Hewlett-Packard and others to bring stuff in. So of course that's changed. But just as their opportunity arose and they said, look, wow, everyone's getting the internet, they're going to be scoped to sell lots of company and private homes PCs. The trend that Travis is referring to here, iPhones, iPads in particular, I mean, companies that manufacture computers are in dire straits worldwide. We know about Dell, we know about others, simply because Apple has suddenly hit the scene and all of the sort of low-end users are using iPads at home.
All right, a quick look at the graph, and I want to also talk about Pinnacle. I think after Mustek we must definitely talk about Pinnacle. You've thrown forward to it there, Travis. In terms of what the share price graph is doing.
Well, we've seen it come off. We've actually seen it, I think in July, the stock was also dual listed. It had a listing in Taiwan, and it's actually delisting from that due to not having enough depository receipts. And so also from a cost point of view, I think they're trying to cut costs and move away from that and focus purely on the South African and African business. I think, it's kind of like a flatlining chart. I'm going to find it hard for it to get out of this industry unless it goes aggressively into Africa. I know that it is focusing on some of the African counterparties because they believe it is years behind West Africa is. I do think that with decreasing costs in internet and broadband and other things, you are going to get more competitors coming in, and we are seeing more competitors in alternative sources like the iPhone, the iPad, and whatnot. So I think it's also brought 2 new companies, so increasing its product offering to clients, but I think it's going to be hard pressed to beat this type of market.
Mustek, hot or not?
Well, it's a good question that you asked about why has Proline done so well, because Proline is very similar with the Proline brand instead of the Mesa brand. So I'd like to go back and have a look at them at some point, because if the story doesn't work here, why did it work for them? Have they been more competitive around price? But again, rand sensitive, changing market dynamics, I'm afraid I'm going to go with not hot.
Not hot on this one. Travis?
I have to agree with the rand price. Very, very volatile with the rand for this. And I can't be hot on this.
You can't be hot on it.